Good morning. Welcome back to the Retirement Report. I'm Hank Parrott, your host. All right, we're talking about Social Security this morning for baby boomers in particular, how to make the use of the strategies that are available to you when it comes to Social Security, and understanding the value of Social Security is one of those. So let's take a look at that. What does Social Security? What is it worth? What will you get? All right, Social Security offers income, one, that you cannot outlive. This is huge, okay? Think of it. Just like with a pension, which now only about 20% of workers actually are going to receive a pension. So that means 80% of us, right, are not going to have a pension. Social Security may be the only source of income you have that in fact offers you income that you cannot outlive. In other words, income for life, right? So if your monthly benefit is $2,000 today, and understanding, again, directly from the Social Security Administration, they're expecting, they're assuming annual cost of living adjustments of 2.6%. Now we look in today's world and we see how smaller they are because of the economy and because of many factors, low interest rates and the like, inflation, all of that. You know, that may seem like a high number, but again, we're looking over the next 10, 20, 30 years or more, and the averages we're looking, and this is what Social Security Administration is expecting, is about a 2.6% average annual cost of living adjustment to your benefit. So if you're going to get $2,000 today and you live 10 or more years, that would be like $300,000. But the other part of that, think of that, $300,000 in value to you over your lifetime. If you live 20 years or more, that's over $650,000, again, in lifetime benefits that you would receive with these COLA adjustments going in. 30 or more years in retirement, over $1 million in lifetime benefits that Social Security would pay for you. So the value can't be understated in terms of what it may mean to you in your retirement lifestyle, and being able, in fact, to, again, attain and maintain your standard of living quality of life. Social Security offers annual inflation adjustments, okay? So if your monthly benefit, again, is 2% and the annual cost of living adjustments are 2.6, let's look at this another way. In 10 years' time, that means your monthly benefit would be $2,585. In 20 years, $3,342, and in 30 years, over $4,320. So you can see how that income is going to continue to increase over your lifetime as well, helping you stay up. Now, I'm going to give you, when we do planning, when I do the financial plans of retirement income capital analysis, one of the things that we look at there is in fact this very factor. All right, we're going to put in a cost of living adjustment for Social Security. I sometimes go a little more conservatively. I say, well, what if it's only 2% a year? What would that look like? And then how about inflation? Inflation, let's say, well, that's going to average 3% a year. So our Social Security increases may not keep up with our expenses, especially as we get older, and the way that basket of expenses work, as I've talked about many times on the show. But that's we want to see those numbers, and that's where how you invest is going to be so much more important too, making sure that you earn enough on your money to stay ahead of inflation and taxes to be able to supplement your income to cover those living expenses. So the number one question, all right, that from baby boomers is, will Social Security be there for me? Some people are definitely worried that it won't be, and because of that fear, they may take Social Security early. And we're going to talk about then how that works, and also when the best times to take are. So let's look at the what's called the Old Age Social Security Disability Income Trust Fund. There it is, all right, still growing. The trust fund balance as of December 31st of 2015 was $2.8 trillion. The total income, and this is the other thing, it's a pay-as-you-go. So in other words, payroll taxes come in that everybody's paying in. So the more we get jobs going, right, this is another big help in terms of fixing our system, if you will. The more jobs created, the more people paying into the system, the more people that are paying payroll taxes. Guess what? That's right. It's going to help as far as solidifying the trust fund that's there to make sure that those benefits are going to be able to pay. So total income $957 billion in 2016. Total expenditures $922 billion. So we actually made a net increase in assets of $35 billion over and above what was paid out in 2016. Now, what are the long-term projections? Okay, without reform, and this is the part, and this is the key, of course, without reform is the key part, right? Benefits are going to fall to 79% in 2034, and this is one of the big concerns. So when we're looking at the long-term projections of the fund, and this chart shows over the next 75 years, costs will begin to exceed the income. There are enough reserves that the system will be able to pay 100% of promised benefits until 2034. Now that's only 17 years away, so for many of us, it's like, that's not too good, right? In particular, when it's going to drop, then income would be only sufficient to cover 79%. We don't want to take a 20% cut in Social Security benefits, right? Well, how do we do that? Well, it's going to have to be reformed. And what's that reform going to look like? Let's take a look. What would it take to restore solvency to the system? Here are some of the things, the proposal that are being studied right now. One is to increase the maximum earnings subject to Social Security tax. So currently, that's $127,200. So if you make over $127,200, right, then we don't have to pay in anymore. So there goes. Now we still pay into Medicare. That part is still deducted, but the Social Security part, which is a little over 5%, is no longer required to be paid. So one of the things that's been talked about is to raise that up so that you continue to pay into the system even if you make over that $127,000, whether they remove the cap altogether or just increase the cap to, say, $150,000 or $200,000 or whatever it might be. Raise the normal retirement age, and this is it. People are living longer. You know, back when Social Security was first came into being, if you will, was first passed into law, the average life expectancy was 61. Okay, so if the average life expectancy was 61 and you didn't even qualify until 60, well, early would be 62, but for most 65, well, guess what? A lot of people were never collecting anything. So this is one of the things they're talking about, though. People are living longer. Now the average lifespan is up into the 80s. So it's we're living 20 years longer than we were back in the 1930s. And so it would make sense. And just as they did in the 1980s when they raised it up to 67, currently what they're talking about for those born, it's 66 for those born between 1943 and 1954, and 67 for those 1960 or later. So one of the things is to raise that up, and that ought to get, they're going to have a tricky time with that one. We'll see how it goes. Lower benefits for future retirees. Escalate benefits based on increases in CPI, Consumer Price Index, rather than wages. Reduce cost of living adjustments. These are all some of the things that have been talked about. I'd say the one that makes the most sense, of course, is that on the Social Security tax. That 6.2 on wages, of increasing that limit would go a long way to making a difference. And then the potential for raising the normal retirement age, depending on what type of work that you do, of course, would have to play into that as well. So the bottom line for baby boomers is this: your benefits are not likely to be affected by Social Security reform. Whatever type of reform comes about is going to affect those that come after, and this is where making sure that we can fix this system to make sure everybody's taken care of is so important. So again, for baby boomers, though, for you that are receiving Social Security currently, for you that are within the next 10 years, let's say, give or take, of receiving Social Security, very unlikely that you would be affected by any reform they'll come up with. So, Social Security question number 2, how much can I expect to receive? All right, so now that we've got solvency, let's say, well, what are we going to get? You know, your benefit's going to depend on a couple of things. One is how much you earned over your working career, right? Your earnings. If you look at your Social Security statement, there's a page just about it. Shows the whole history of your earnings on there, and it's important that you look at that and discern, you know, make sure it's accurate for one thing, and that all earnings match up with your actual earnings, and that they in fact are accounted for, since that's going to help determine what you're going to receive. The next is the age at which you apply for benefits. So understanding basically how Social Security benefits are calculated is a big part. So for instance, at age 62, each year's earnings are tallied up and indexed for inflation. All right? The highest 35 years of earnings are average. So we're looking at how Social Security benefits are calculated. When they're looking at, again, your earnings are average, 35 years, highest 35 years, that is divided by 3 bin points, as they call them, to determine your primary insurance amount. This is the amount you're going to receive at your full retirement age. So let's say for most that's age 66 right now. Benefits then are increased each year by cost of living adjustments. So they show that as they will increase even off of what your statement is, and they'll give you, they break that down for you as well. So a lot of people mix up this 10-year part with the 35 years. 10 years just to qualify to receive any Social Security benefits that you have to have 40 quarters of work. So it doesn't have to be in sequence. It can be broken up as long as it adds up to at least 40 quarters. That qualifies you, but it's your average of your highest 35 years adjusted for inflation that's going to determine the amount you receive. Okay? We'll talk about, now I'm not going to get into the example of the benefit formula. We're going to skip that. What I will do, and I'm going to end with this before we go into break, is the full retirement age. So year of birth and your full retirement age, you can see there from 1943 to 1954, so when we're talking about boomers again, it'd be age 66. From 1955 on, you can see that it incrementally adds the months onto that to where you get to age 1960. If you were born in 1960 or later, your full retirement age is 67. Now we're going to talk about that. We're going to take a break, and when we come back, I want to get into the significance of that, what that means with regard to how much money you get, right? That shows your full retirement age, but the next part of that is what does that mean in terms of how much you'll receive at full retirement age, and how that compares if you took early or if you even delayed taking, how much more you might get that way. And again, we're going to get into some strategies of how you can use this to make sure you're able to attain, again, right? We want to attain and maintain our standard of living and quality of life no matter how long we live. And this is just the first step. All right, we're going to be right back. Join me here after this break, back on the Retirement Report.
The time